After raising interest rates 10 times, the Bank of Canada held their key rate at 5% today, in line with what most economists expected, but they did say there are some dark clouds on the horizon for the Canadian economy. First, on the inflation front, the bank believes it will continue to increase in the coming months, but they do feel that later in the year it should start to decline. The July number was 3.3%, which is well off the 2% target the bank continues to reiterate they want to get inflation to. Now, a key part of inflation increasing is wage growth, which right now is between 4 and 5%, and that's been a key metric that the Governor of Bank of Canada, Tiff Macklem, has been using to determine how sticky inflation is. Essentially, Macklem has reiterated that if wages in particular keep going up at this level, inflation will not be able to get to the 2% target, which means interest rates will continue to stay elevated for longer. It's kind of a vicious cycle that the Bank of Canada believes will lead to entrenched inflation. And we've seen that increased wage pressure with numerous strikes, with workers saying, hey, our wages aren't keeping up with inflation and we need more money. Think back to the PSAC strike here in Ottawa, the dock workers in BC, and even Metro employees in Toronto have examples of how wages are going up. And in the bank's eyes, that makes it harder to bring down inflation. And if inflation persists, the bank says they're willing to increase rates further, saying this morning they remain concerned about the persistence of underlying inflationary pressures and are prepared to increase the policy rate further if needed. And I should note, there was no talk about potential cuts, and Tiff Macklem has already said before, Canadians shouldn't expect any cuts this year. As for the overall health of the Canadian economy, the bank believes we're now in a period of weaker growth. The second quarter numbers saw the Canadian economy contract by 0.2%, the bank blaming slower consumer spending, wildfires, and a cooling housing market. Now, that doesn't sound ideal for regular Canadians, but for the bank, they say that's what's needed to relieve price pressures, aka inflation. Now, we often hear from Tiff Macklem after these rate announcements, but he didn't speak today. He'll be in Calgary tomorrow, where he'll explain the bank's decision to keep interest rates steady. Mackenzie Gray, Global News, Ottawa.